Hey everybody, Day Trader Rockstar here, and today's video is one that everyone's been waiting for, the 22 range chart. 22 range chart we're going to focus on today using it with the Rockbot trading strategies, the Supersignal Quad, or what we call the Supersignal strategy, buy side on the 22 range chart. Now, the Rockbot strategies are automated trading strategies that work on TradingView and NinjaTrader platform, and they basically point out the high probability zones, the methodology I take on divergence trading, quad rotation trading. Everything that I teach has been pretty much programmed into some bots to help identify these levels and identify the areas we want to trade. In some cases, like the automation that is available, like in a NinjaTrader, can even trade for you. We use this on multiple time frames. I'm just going to jump over to let's jump over to DayTradingRadio fast, just to kind of give you a picture where you could get this stuff before I start the video. All right, we shot right over to DayTradingRadio.com. Right now, there's no screen. That'll actually turn on at 6 o'clock when we start futures trading tonight when I do this. But this is the site. If you scroll down, it tells you all about the site and stuff. But if you scroll all the way down here, there's an information tab on the Rockbot scripts here. Right here. If you look at the scripts, you come to this page, it'll give you a lot of information on the scripts and how they were developed. So I just want to point that out instead of wasting time on the video. I've been trading since '96. I started developing the bots. Well, I started developing the methodology in 2007, 2008. The bots have come over, for the last 4 or 5 years. I've been developing, transferring the methodology over to the bots. So as an indicator, as a reason to be in front of the markets at the right time, because I'm more of a manual trader. I don't really promote using the bot to trade full time because there's just too much that you need to know about the markets to pretty much depend on an automated system. So I do not recommend that, even though it's an amazing tool to have, but I do recommend it as a tool and a confirmation tool. And we'll go into that a little bit more. You could trade anything with it, the futures, the stocks, Bitcoin. I just did a video before breaking down how to set it up on Bitcoin, how to set it up on stocks. So one of the previous videos of this one has that information. You come with multiple strategies. So we have a long strategy, we have a short strategy, the Rockbot long, the Rockbot short. We have a bull flag and a bear flag, which are called our 2020 bull and bear flags. And then we have this amazing script here. This is the biggest one. This is a Supersignal Quad, multiple time frame buy signal. Right now I have it as a buy. I'm almost done with the short side, but I had to fix it for rhythmic issues, so it just got updated and it's working great. And then I give you the quad rotation indicator along with the indicators. That pretty much points out when we have the quad rotation, which you hear so much about and what I've developed over the years. It has an automated trading mode, fully automatic entries, exit, money management, stops, trailing stops. I have so many videos out on this, we could go into this, but I want to focus on applying it. And here, this is what it looks like on the screen. And it'll apply, it'll take trades, everything will work. The bull and bear flag, it's just textbook, what I teach, the 2020 bull flag, the rotation of the 9-3 compared to the 60-10 and the price on the 20 period, all that's calculated in, and they'll execute the trades. And then we have the new one, the Supersignal. As the name suggests, the signal is a combination of 1 minute, 5 minute time frames, plus the Supersignal is generated when we have the quad rotation and a divergence. So it's just so many things that get in there. I have some new ones that are coming out, the shorts, the Momo trades. You can also get it on Patreon. If you want to try it out, you're not a member of Day Trading Radio, you can get all those scripts on Patreon. There's a limited amount of spaces available. It's probably 17 left, so I'd be if you're interested in checking that out, you could add there. It also comes with your membership at Day Trading Radio, DayTradingRadio.com. It comes with your memberships there, not your trial memberships, but your pro memberships. It's all on the page. So let's get started. What we're all here for. This is pretty excited. 22 range chart. I want to show you some parameters to use, how to set up the charts, tweaks and tips, all going out here in 2025, and how to get started here. First thing we're going to do is we're going to take it that you have the scripts in your possession, that you're either a member or you got it. And when you get it, and this is going to be really, we're going to talk about, I'll try to mention TradingView, but this is kind of for Ninja Trader too. a Ninja Trading, I highly recommend, if you don't have a Ninja Trading account, to get one. You can get one free with the prop accounts these days, and this is a great way of testing everything out because you get the license and stuff, and it's very minimal. So if you're interested in that, I put a link right in the description on the top for the Bullinox or the Apex, and a lot of people that on the site use these two for their Ninja Trader platforms. So it's good to have that Ninja Trader platform. So if you have the Ninja Trader platform, or even if you're a new member of DayTradingRadio, let's go back to new members. Let's go back here. When you sign in as a member of DayTradingRadio, let me get over here. Let me go up to the sign-in area here. All right, so you're in here. This is where this is where our charts usually go during the day. This is our trades here. Right now, we're off the air. It's Sunday, but tick strike, news, everything else. Rockbot channel where you could watch the scripts perform. If you click on that, that'll automatically show you the Rockbot scripts running. Now, the Rockbot NT add-on, this thing has a lot of information on it. It tells you, the breakdown of it, kind of a different breakdown, some videos on it. Go up to the Rockbot code. Click on Rockbot here. If you remember, you get that. You click on the Rockbot latest scripts. That'll upload into your site up here. You'll see it's been uploaded to your computer. And then through the Ninja Trader platform, you're going to get your Ninja Trader up. Let's see here. What do we got here? Your control center. If you go to your control center, you go to tools, you go to import, and you go to Ninja Script add-on. Click on that. That's going to pop up with a window on your computer. And there it is, Rockbot latest script. So I would click on that, click open, and it would upload into your Ninja Script platform. Now that you're a member of DayTradingRadio, you could say, John, I'm a member. Here's my Ninja Trader ID. I need your ID. So you're going to send me your ID, what's called your computer ID, or your machine ID, I should say. It's on your About tab right here. You're going to copy and paste that. Not take an image, but you're going to copy and paste it because I need to copy and paste it myself and put it into the machine to give you access. And you're going to grab that and you're going to send that to me at ironaction@yahoo.com or dtrs@daytradingradio.com with your username and anything else you need. But anyway, you know how to do that. Most people, this is going out to people who already have the script too. So you go import it. Now you have it available. So when you bring up your chart, this is what we're going to do now. We're going to bring up our charts, and we're going to go up here to the range chart. Now this is where it gets a little tricky because people say, hey, John, what the hell is a range chart? What's a range chart? Good question. I don't think most people know what the range chart is, and why does it work so good? Well, we typically trade on a chart that's called a time-based chart. I would say I'm not going to even suggest how many I know, but the majority of traders I know trade off of time frame. So you're trading off the 1 minute time frame, the 3-5 minute daily, swing trades, whatever. Everything's based on time, and that time is how long that candle is active for before it gets printed. So if it's a 1 minute time frame, then you have a 1 minute. So if I go here, let's go to a 1 minute time frame here. Each candle gets printed after a minute's time, and the whole candle from the top to the bottom is going to give you it could be different sizes. So whatever happened in that minute of time is going to show up on your candle, your high, your low, the range, the distance it moved, where it closed, where it moved higher. This is all done with candlesticks and how to identify candlesticks. And from that point on, the stock or whatever you're watching will form different patterns and stuff. And that's what we typically trade. Well, the range chart, a little bit different. You have this option. If you go to your Ninja Trader and you go down, you'll see range. But you won't have 22 there. So what we're going to do is we're going to go down here to configure right there. And we're going to hit that configure button. Now, it might be a little small. You might have to zoom in. You can't really do much about that, and you're going to go down to range, all right, and then you're going to go to add, and you're going to go put down 22, and you're going to put OK, and then boom, it's going to pop up there. Now it's popping up there multiple times. I've used this multiple times for examples, but you only need it in there once. I have it up on the top here, so I know it's there, and I'm going to apply it. And then the next time I go up here, now we have minutes, seconds, range, tick, volume, day, week, month. We're going to go to 20. There's 22 range. So let's go to the 22 range and tell you a little bit about the range bar. The interesting thing about range charts or range bars is they have nothing to do with time. And that's a totally different way of looking at the markets. It has nothing to do with time. It has all to do with the range of the price to get. So we set it at 22, and 22 represents how many ticks. So it's going to be based on the ticks, and each tick based on your what you're trading. All right. For our purposes, we're usually trading futures, like the MES or the NQ, anything like that. And we know that most of these things, a tick is a quarter point, or 4 ticks makes a point. You could use that as a reference if you want to know how far you're going to put 22 ticks is. But 22 ticks is going to be the range we're using. Why 22? Well, why do they use a 200-period moving average? Why do they use a 20-period moving average? Why do we use a 9-3 stochastic? Why do we use, certain numbers? It just becomes almost industry standard or defaulted that way, and, what we like to call is a self-fulfilling prophecy or whatever. So many people looking at something and it becomes used and it becomes standard. I wish I knew better on the 22 range, but I know the magic behind it. I know how to identify it. It's just something that's caught on. It's a great scalping, and what is caught on is for the inner, the kind of the ones in the know, like the newer traders coming out, and they're just they're reading what's in the book, and they're going on YouTube, and they're talking to people. They're saying, I get my Robinhood account, and we're going to trade the 5-minute time frame. Everything's time for them, but the traders in the know have been there a while. They know there's different ways of actually measuring the markets out, and there's better ways too, because sometimes those other ways are just a lot of noise until you can get rid of the noise. And what the range chart does is get rid of that noise, and everything is kind of more organized. So the range only gets a chart, when we had a candle, we get printed after 1 minute. A candle gets printed after how many ticks the range is, in this case, 22 ticks. So that means every candle will be the same length. It'll print after 22 candles, so 22 ticks. Now, I set this up not using, full disclosure. When I came up with the quad rotation, I did it on time frames and stuff. I started, getting feedback from some big traders that came to me and said, John, and it's, I get this a couple of times, and I say, all right, I understand that, but when I start to hear it over and over again, check out the 22 tick. This thing is killing it. And I started investigating, and I never really traded a 22 tick. But what I started to notice is I left, what people were doing is leaving my template on, my quad rotation template, and trading that, and watching watching how everything lined up. Now this is on the 22 range right now. This is on the 22 range. You can see this is a super signal right now, and it just about called the bottom on that. So you can see that the quad rotation got oversold, and we actually had a little divergence here. Now this divergence is underneath the 20, where I teach, and when I like to teach a method, it's almost like teaching a new person entering a new sport or something. You want to teach them a good foundation, a good basics. So I teach about divergences where we have to have a low and a lower low and a low and a higher low, and it's better to determine that higher low is above that 20 and that lower low. It's just an easier way to do it. It's like holding the bat right, holding anything right. Good fundamentals, good things, and that's a proper divergence right there. And from proper divergences, you get nice moves, and these are all based off of things that you learn here with me. Every day we go over it and we identify the setup, and we say, here's our trade zone right here. This is our trade candle right here. We identified channel. In the channel, stop goes underneath the lows. We have a quad rotation. We're going to look for the pop. We're going to take it off on the rotation. We're going to move our stop up to break even, and we're going to continue our game plan like that. So we take that trade. We'll wait for another setup, and we'll take that trade. Now, what this is going to do for us is going to identify the divergence. It's going to identify the signals on the range chart, not on the time chart, which we're used to doing, but on the range chart. And what we're going to see is just we get that when that range takes off, it moves fast, and it's very aggressive. Now, I'm just running the chart. Right? I'm running the Supersignal. We still have to go over the parameters, which I want to do. But now you're going to go to now that you have a chart up here, pretend this you don't see anything on here. You don't see this. Let's remove that. Apply it. Boom. So there's nothing on your chart. You're going to go up here to your strategy section, which is on the top of your dashboard up here. And you're going to bring up your strategies. Now, when you downloaded the strategies onto your machine, you're going to have 4 of them. Now, I'm going to have a lot more because I'm building strategies as every day. So I have a lot of things that I've been working on, things that I haven't deleted. So don't go by this and say, "Oh, I don't have that one on your list. I don't have that one. I see that one on there." Believe me, I get this all the time. But you're gonna look for the where is it? See, the Supersignal 23 is now updated to the Supersignal 20 Quad Rotation Divergence Buy 2025. That's the one you want. So it brings down here, and then we're going to take a look at the parameters here. Now, I didn't copy the parameters. Now, I want to bring up something here with you just a second, because I did copy some new I did come up with some new parameters on this that's been working all week, and it's been going. When I say working, I put this on, because I just reissued this script with the corrections for the rhythmic. Rhythmic sometimes and NinjaTrader do not work together when you have automated trading. The market sometimes is too volatile, and the market moves so fast, but at the time that the order gets sent to Ninja, it doesn't get picked up properly, and an order will come off, and then a stop will be placed, and you'll have a hanging stop, or you'll have some trades on there that shouldn't be on there. And that's because of the volatility in the market and the time that it takes for NinjaTrader to go through, or Rhythmic and Ninja to kind of talk to each other. So I had to redo that, and so I rescripted the trailing stops as a separate. I just corrected that issue, and we have the parameters here. So I want to get you the parameters. Let me get the parameters for you right now. All right, that's the 300 tick parameters. 300 tick, trailing stop, parameter trading view, yes. Is that it? Oh, that's the ES. I'll find them in a second. Hold on. All right. Oh, well, here it is. So this is the one that I want you to use. This is on the NASDAQ. Now, the other thing we have to do is on this chart here, that's on the MES. We want to actually move that, and we want to use the 22 range chart on the NQ or the MNQ. And it just works so much better. There's a lot of range, a lot of explosive movement in that. It's really, for these parameters I'm going to give you, these parameters are set for the NASDAQ better. So we're going to move that to the NASDAQ. How you going to do that? And I like using the micros, the MNQ versus the NQ, especially if you're trading prop accounts. It's just less volatile, less damaging if something goes wrong and you miss something. It's just an easy to trade these. But let's bring that up. It's 325. There we go. All right. So we have the 22 range. We have the range. We have the NASDAQ. We're going to go to our quad rotation div buy 2025. We're going to bring that down. And then we have our parameters we're going to fill in here. We're going to do this. This is going to be the parameters. See if I can squeeze that through this. Huh. All right. All right, so I want to do 3, 15, 1. And I'll show you what this means. So parameters, take profits, contract 1. You could trade this. The way I have this set up is you could put in any type of combination. You could take as many contracts you want. You could take them off at different points. You could have set trailing stops. You have a signal bar low, which with divergences, that's very, very important because our divergence stop automatically placed is just a savior. Always try to keep this on signal bar low. There's times to put it on ticks. Here's ticks, but there's times to do that. But when you really trade in divergences, I prefer it on signal bar low. You'll just notice a big difference. So the first take profits contract size. So how much? So let's say we're going to put 3 contracts there, 3 MNQ contracts. And where do we want to take that off? And we're going to take that off after 15 ticks. And then we're going to have one more contract on that we're going to take off at 40 ticks. I believe that was what it was. And then we could have another contract on if we want a third target, and we'll keep that, and we won't put a value on that. And we could put zeros on all the values if we wanted to. Oh, if we put zeros on all the values, you didn't have to put anything else on here except you need your initial contracts. So you're going to learn how to use this. You're going to test it out. You're going to learn. You're going to understand there's different combinations that you could do and use with this. So it's just any of these combinations. This could be 7 contracts. This could be taken off after 1, and then whatever the second profit value is added on to that. So if this is the total 40 ticks, where the first target is 15 ticks, and then it's 40 ticks, not 40 after the 15, but another 25 after that, which brings us to 40. So just another 25, you put 40, and it takes another contract. Whatever's there gets taken off at 40. And anything that you want after that is going to be really ran with your trailing stop. That's going to be managed by your trailing stop. So we might keep one on there with no target just to manage it with the trailing stop. What was my trailing stop on this? I just want to make sure I had that right. 15. Now, lots of times I'll make that trailing stop start at the same time our first target is hit. That kind of puts us in as a break-even trailing stop. That's if we move this up to 15 also. So it's 15, 3, 20. So the reason, let's go here. 50, so we're going to put down 15. At 15, what this means is trailing STL, trailing stop loss, will start after 15 ticks. All right? Steps is how often, does it move up 2, 1 tick at a time, 2 tick at a time, 3. I put it 2. Trailing stop loss stop. That represents, I'll have some details on this in the video. In the post in the video, just to kind of give you reference charts. Trailing stop loss stop means it follows where that stop loss is following up the price. By how many ticks is it following it? In this case, if you were trading a 15 tick first target and you started, so it hit your first target, right? Hit your first target. After 15 ticks, the trailing stop loss starts. And where does it place its trailing stop? That's whatever this number is going to be. And a lot of times you can put that at 15, which would be 15 ticks underneath the first target, means it would be break even. So this is a good way of doing a break even, just like that. So 3, 15, 15, 15. But because we want to give it a little bit more room, and that's the thing that we have to deal with, is this is going to be the hardest part of everything. The entries are going to be great. The hard part is trying to manage and get as much as you can. And that's why I always say I like this to take my entry and then I manage the trade. But in this case, I think we're going to move this up. What were we going to move that up to? I'm going to fire it up now. That's going up to 20. So we're going to move that to 20. So we're going to give it like 5 more ticks. We're not going to keep it that tight. Sometimes I move that to 40 if you want to try to capture a bigger trend. Because if the market moves up really steep and then comes back, 40 ticks on the NASDAQ is nothing. It's 8 points. Right? I think I did that close to 8 points. 32. 10 points. 10. I didn't realize. Anyway, I want to keep it at 20, and we're gonna activate it. So we want to make sure, because it's going to be temperate, we want to activate it. So we activate that, and then we'll just put it on this for now. Sim 1 minute divergence here. Let's go to enable here. So I think that's what we have. So then we're going to apply it onto our script. There it is. Apply it. Now it should show up here. There it goes. Weird. That's a 15. 22 range. Oh, you know what I had on before? I was wondering. Look at this. I just want to put something else on here. I remember I was doing some tests yesterday on the ES. Let me just see. I want to see if this switches over to the ES. Because I got a buy signal right at the close. Let's see. Let that calculate in? Yeah, right there. All right. So that's the difference on that. It works good on the ES, but I think the 22 tick, you're going to get more explosive moves on the NQ. The ES is not going to be explosive, but one thing I did notice on this, and we'll just start off on this right now, is that I've been hitting my targets, even though I expanded my targets. Normally, 15 ticks. Usually I try to keep it 1 to 2 points with a trailing stop. This seems to have, the signals I'm getting are very explosive. And there's a lot more upside left on the table, as you can see. So now it's running, and it's searching for the criteria, which is our quad rotation divergence. But in this case, I have it tweaked a little that we're looking for mathematical divergences, and it's not taking that unless we get over that 20. So we actually see that divergence there, and it's above that 20. You might say, well, that's underneath the 20, but actually it's not. It's actually above the 20 when it triggers. That's our trigger thing, and that's our, there's always going to be a candlestick delay. Okay. Here's another one, and this one's pretty visual. You can see that low, and that lower low, and that low, and that higher low, and this is just textbook. This is the best one right there, and it's a quad rotation divergence, and you can see we went up and took trailing, take profit, stop loss, came up underneath it eventually. Follows it up. But if you had this a little wider, you could probably capture more of this move. And that's something that is going to be probably one of the more difficult things that you're going to analyze. Now, I always say, if you look at your quad rotation, you get a signal, and you take your first profits, you always want to keep something on. If it looks like a great double bottom, especially if it's what I call a super signal, meaning it consists of a quad rotation and a divergence, and a steep divergence, and I won't even mention this, but it was also a double bottom divergence here. That low right here and this low, double bottom. We had a low here on the 60-10, way down here around 3, and then up here it's up about 13. So it's almost a 10 point shift there between that low, the double bottom, and the higher low. I could see it. And I also see it I also see this as a 44 divergence. And the one rule I have, and it's an unseen rule, and we don't talk about it much, but if you have a 44 divergence, you take that trade as fast as you can. I want you to jump over the chair, dive for your computer, and you get your order in there. And you put your stop at the lows of the session, and you try to let that thing ride. It is the best setup ever. That should be that's actually a whole different script that I'm working on just to identify that. It's about 3, maybe 4 signals a week, but they're undefeated. And when I say undefeated, I kid you not, we talk about every day. We still haven't found one that has been defeated. And when I say defeated, it doesn't work out. It doesn't work out. Now, please don't go and search the internet and scores on the internet looking for one that doesn't work out, because I'm telling you, it is a great setup here. Take it if you see it. So anyway, this is actually now triggering what we call a 22 range divergence quad rotation. And as you can see, if I zoom out here a little, you'll see that, and this is on the ES chart. All these, I mean, this is incredible. I mean, if you're not looking at this and realizing, hey, you got something going on here. There's something that's really, Control F11, this area here. All right, we can zoom out. It's actually where the blue thing is. I don't have to circle it. Just look where the blue line is. Wherever that blue line is, there's probably a good bottom there. There's a very close to a good bottom. Now, this is usually very explosive. When it moves fast. It takes profits. You're in there. Remember, this is not a time base, chart. So you can't say this. We've been in this for looking at the side and looking at how long. But if you do go down here, you will see the time. You will see how long you could be in this trade. But sometimes that could be a second. It could be 5, 15 candles in just a few seconds. Well, not that. I mean, that's kind of exaggerating, but you'll just notice, especially overnight, you'll see that because volatility is not there, one candle could be in an 18 or 22 tick range for a long time. So you're not going to get the same charts overnight. Now, this is again on the ES, and we have taking profits, and then the stop loss comes up, and that's what I want. I want this taking profits to really to come in here. The stop loss is going under 5 points under. It's definitely, it's getting the bounces. It's not predicting that this is going to be a bottom or anything. These are indicators that are automated for me. It tells me where I should be in the market. It tells me maybe I want to get in the market, and it confirms it, and then I know I'm in the right spot. Here's a beautiful divergence too. If I see a visual divergence, rule number whatever. If you see a visual divergence on a range chart, it is an extremely powerful setup. It is extremely powerful setup when you have these divergences. You do get the upsides on these. Now, there will be times when the market is selling off and you don't get your full rotation. In this case, we are getting our full rotations. Everyone, I don't think anyone didn't get a full rotation. Yes, the trailing stops came back up here, but as you could see the first targets are being, I have it just zoomed in so much. You get first target hit, and then a take profit, 3, then the trailing stop comes in. And we didn't have much on the trailing stop. Now, as you can see, most of these, let me go back here. Most of these hitting at certain, there's different ways of actually trading these. Let's go out here. Take profits. Long. This one's the only one that didn't. It kind of got the top there, then came back, then doubled up with a better divergence here. That was actually a better divergence, that low and this low. It wasn't really a steep, it was a mathematical but not a visual divergence. All right, now we're going to bring up the NASDAQ on the 22 range. Now, the NASDAQ's going to have a totally different chart. Sometimes you see the charts all the same, very similar, but all right, so here our first one actually didn't perform. That was right at the close. Right at the close. Remember we talked about seeing a ton of volume in? Look at all these candles. See all these candles? And it's kind of just drifting and kind of drifting. Look at the time frame here. 1558, 1559, 1559, 1559, 1559, 1559, 59, 59, finally 16. You had 8, maybe 5, 6, 7 candles in that time frame. So there was a little volatility. There's other things about the script that you probably might get chopped up right at the close, and I don't recommend people putting it on the close. If they are, they're going to just, understand that's where all your orders are coming in, at those close and at the open. When the market gets into a nice choppy range and you can start identifying these divergence and quads, then you start to see something really good. So usually you get them right on the lows. This didn't hit the stop loss. Let's see what our stop loss is. And this is also, let's take a look at our strategy. The thing is, sometimes you have to analyze the range of the day. And when we talk about that, it's like, what is the market giving us? If the market's in a funk and it's not giving us anything, it's like really tight, and it's, you want to be careful and you want to set your parameters to kind of, follow it up. So if I hear 20, that's pretty tight for a NASDAQ. Typically, like I said, sometimes I put 40 on there. I want to show you a different way. So if we put 40 there, let's just apply it. Let's see if we capture any bigger moves. Sometimes that could work against you too. Yeah, this one. See, you got much. You're able to capture all this move, and then the trailing stop comes in. There's a little bit. You can catch a lot more if you widen your stops. Look at this. All this move here. All this move, and then it kind of gets the pullback. Beautiful. And imagine that you could have caught all this. These are still really good entry zones. All the way up here. Take profits, and then it came back down. But that's fine. You're getting out. You're hit and run trading. This will be running tonight. I will run it on. I'm going to actually start its own little channel just to run this thing. Look at this. This is like textbook right here. Perfect entry. Take profits, holds on. Takes profits, holds on. Finally, stop loss comes in. Amazing. Here's one that broke down. So you do, if the market does get into some news, you have to be careful on that. You could get some false setups. There could be news. This actually, I see why this one actually gave us a little divergence here. I would say news is probably our number one enemy of anything. The unknown. Give me a nice tight, sideways choppy market. Give me that. Look at this. Look at that. Look at these. Look at these entries. I want to zoom out here so you can appreciate that. Holy crap. I mean, how? Here. I think it was probably one. That one didn't. That one. This could have captured the whole thing. This could have captured, close to the whole thing. That could have captured the whole thing. These are a couple bounces. Captured a little there. This is one that did not. So there was probably two that eventually rolled over. And again, I don't count anything around 3:30 to 4 o'clock. I don't like trading that time frame. So I would turn that off here. That's at 4 o'clock. And again, check the other ones at 3 o'clock or, especially overnight too. Sometimes you might see some volatility come in. Overnight trading is going to be a little bit different. But as you can see, I could go all the way back, and we're getting these bounces. This thing's a sniper. Stop loss too. Believe me, these things again. 10. Look at this. Look at the there's 10. I mean, this is all lots of candles, all in that same range. It's all right. Well, that's how this works. I highly recommend it. I highly recommend using the parameters we use. I want to just show you one more set of parameters that I use on this. Let's see, where is that going to be? Oh, let's go here. All right. We have a good This is good. We have the 40 trailing stop seems to be working good. Where you'd start that trailing stop, that might play a point. You could actually run this through the optimization in NinjaTrader, but there's so many parameters on this. I don't know if the machine has enough computation power to kind of optimize a script like this. But if you find yourself hitting on something really good, please touch base with me. Let me know what you find it, because that's how we really improve these things. And as for what it is, and it's not much improvement, but there is always improvements to be made. I'm not saying I'm looking to improve it. I think the formula is perfect. I think that the only thing that's going to be an issue is just understanding when to use it and what type of market to use it in. Choppy markets, things that are not affected by news and heavily trending markets based off an outside influence is very good. Anything that has outside influence on, I would, kind of not move these, because or change your parameters to adjust to the side that's winning. So if the market is selling off, then your profits are going to be tighter. That your bounces are not going to really give you maybe 15 ticks. Maybe they're going to give you 10 ticks. So you want to adjust things on the run like that. So another way of actually throwing things in here, we was talking about most of everything was being taken with 10 tick. You can, let's take a look. Say I'm just going to take 7 contracts and I want to take it off 15 ticks. Or I want to just, all right, that's what we're going to do. We're going to just give you an example. 7 contracts, taking it off after 15 ticks. Then we have 3 more here, and we're going to open. We're going to have a value. We're going to have an open-ended value here. We're going to put a 0 there. 0. So if 7 come off at 15 ticks, there's 3 left on there with no target, but we're going to be followed up by the trailing stop. Single bar low is automatically in there, so you can see that would cancel the trade if it hit that earlier than all this. But typically it's going up. Let's increase this a bit. Let's increase that. I don't know if that, like I said, that's difficult sometimes to. It's okay to run it if you're managing it. Let's take a look at this now. So what I did here is 7 contracts come after 15 ticks. We can see that's been just hot. I have another 3 on, but with nothing. Oops, we don't want anything here. We want 0 here. We have 3 on, but no target, nothing target, no targets, no targets. This trailing stop, it will become up 60 ticks, following everything up. After 15 ticks, it'll start. Let's apply that. So you can see now we have taken most of your profits off. Taking 7 off on your first target, then your target comes in. Taking profits, stop loss comes in. Not bad. I mean, it's just a different way. This works so good the way you could, just set it up. Or you could just say, I want one and done. One trade, in and out. Most likely you will catch a runner with the bigger thing, and then this is not bad, Just want to try to catch as much as we can. First profit's no problem getting. Trailing stop, playing with fire there. All right. We'll leave that be. Let me see. One last thing. If you have any questions on this script, you could email me, dtrs@daytradingradio.com. There's another thing I wanted to use here. Oh, yeah. Let's see. Oh. I'm experimenting live with you right now because we're going to say we have 7 contracts on and we have no target. We have no target, and we're just going to run it up with a trailing stop. But we're going to make this trailing stop. Let's just I'm just curious to see how this thing works. I haven't make sure everything is working properly. All right. So it's just one trade. It's one and done. I just wanted to see if it was showing you the one trade, and it is. It's just one and done. Trailing stop follows it up. I'm not saying that's this is the parameters to use. I just want to make sure everything's working correctly. You're still going to get the good entries, but because of the stops, again, the stops are going to be very important. Understand the market conditions. But use the other parameters. Much better. Another good way of actually let's take a look at this now. Let's take a look here. Apply. All right, so as we wind up this video, I hope you enjoy the script. Is there anything else I need to? Oh, you know what? Actually, let me just put this back on one more time. 23 buy. We could adjust these the way you want them. I will send out some photos of what I think is going to be a good set of good indicators here. So. Actually, what do I want? 5:15 to 40. Signal bar low. Trailing stop is going to be 15 and 20. Let's go with 15 and 20. We'll move this up by 2. We'll just keep it on sim for now, and we're going to enable this. But what I wanted to show you here, because right now it's on range 22 range, but we're going to change this over because there's a couple things I never did test it on, which might be interesting to see. All right, let's let it calculate in. All right, right now the market is actually currently open, but we don't see anything here. So we have the 22 range, the Supersignal Quad Buy Divergence 2025 edition on the 22 range. Now, we ran it on the ES before. You could see how it was working. It was really working well on that. Let it set it up here. They almost had another setup here, I bet. But I want to also put it on. Let's put it on. Do I have the Dow futures on here? YM. Let's put the YM on here. I haven't put this on the YM at all. I'm just curious. Oh yeah, it looks pretty good. It's amazing how it catches the bottoms. Here's the YM, and again, be able to capture all this would be the most important thing in the trade. How does it know this? Oh my God! All right, so it looks good. Takes profits using a downtrended market. The other thing is using this as an indicator. If you see it activate, you want to confirm that you have that good divergence, that higher low. And once you can confirm that, then you have some time to be in this trade. All right, and remember the other things that we use, as part of the methodology, I might not have gone over in this video, is the importance of the recognizable channel. Recognizable channel, very important. In each one of these cases, we actually have a nice little downward channel. In each one of these cases, you have a little divergence, and you have a little follow-through. Now, in the downward channel underneath the 200, I tend to take it off on the rotation up to 80. Now, it's good that it's taking profits. It takes major profits and it moves the stop loss up and then it hits its stop loss. But then we start to roll back over. And then we got back down. We were for another setup. You get another bounce back up here. And right here, you're hitting your target, and then trailing stop is coming up. But you can manage this yourself. I want you to let this thing take your positions. You're going to get a fast little move up. And then when this rotates up, you should be selling into strain. You shouldn't let this thing come back 20 ticks. Don't take that. Take this. Take it into strain. That's the important thing. And what I mean by that is it'll get you in. You'll hear the order get in. And then it'll set its targets, it'll set its stop loss, but you can move those on the Ninja, and you can adjust those, or you can cancel them out and place your new ones in there. That's what you should do. This will get you in really good. And then you can manage it based on your other indicators. Now, the indicators, or I say indicators, a lot of different things. We're looking at a quad rotation. If we have that rotation on the 60-10 pushing up, then we have more upside. If we get a fast rotation and embedded stochastic, then we're looking at a possible bear flag. There's all different little clues in the market that's kind of telling us what we want, how we want to manage our trade, and that's part of the process of trading, which all works great with these scripts because there's just a few rules that you want. Look, there was a setup right here. I might run this tonight on the site. I might run this on the site and just see what it gives us using the Bullinex account. Bullinex account is 83% off now. 83%. It was 91, but they moved it down to 83. It expired yesterday. But the 83 is good until the 13th, so that's pretty decent in itself. And you want to run that on one of these. DTR 83 is the code. DTR 83. So we're going to run that down. I'll run that down. You know what? While we're at it, and I don't really do this too much, but let's actually see what the let's go to this here. Let's go over here. Let's go to new. Let's go to strategy analyzer. All right. So we're gonna this is a strategy analyzer that comes with NinjaTrader. Now, I'm not a big fan of backtesting because I just feel like there's certain areas in the market you win and trade. You can't really rely on this. This is just I use it for some data notes, like what my largest trades are, what my largest drawdown is, how many, I use it just because it's interesting to use. But other than that, let's put it in here. Let's say we're going to do the MNQ. After we'll do the Dow. But price is based off of range. And our range is going to be 22. And we're just going to go back. Let's go to, I'm going to go, this thing will never do this. So let's go to this week, just the last couple of days, because that's what we were following. That's how I was doing that. I'll go down back further, but I just want to get a feel for how many trades it's taken a day. Using instrument hours at overnight. Let's see what this looks like. So we're going to run it. Well, what are our parameters? Oh, we have to use the. No, I'm wrong here. We have to bring it first. We have to bring up we have to bring it up. There we go. Quad rotation div buy. Trailing stop start. What was it going to be here? 15. We're going to move it by 2. We're going to move it by, what are we going to do, 20? And then we're going to have 5 here, contracts on. And then we have 15 profit. Now these, could you adjust these? Sure you can. Second target, 2. And we're going to look at 40, 40, 40. Signal bar low, perfect. And MNQ, good. Range 22, good. 312, end date. How could the start date be before the end date? Wow. Amazing. Amazing, Johnny. There we go. We'll enable this. And then we're going to enable. That's it. I think we're good. All right, let's just see what the results are. It could have some fluky trades on it. I'm not counting on this too much. Takes a while to calculate these things, even if it's just 3 days back. So not much here. 61. Let's move that. Let's move this. What do we got here? 5. Range chart. 14.5. Maybe there was no action there. Oh, let's see here. 5, 15, 2, 40. Oh, we don't want this down here. We see I had this take profit contract. There had nothing there. That's going to mess everything up where it has 0. See, it says 0 there? Because that works against you. If you actually put it, you know, the way they calculate trading losses and how many trades you take, even if it takes a profit but comes back and gets stopped out or something, it actually, let's run this now. I bet you see a big difference. Let's see here. Well, it's actually a negative here. Let me see what's going on here. Oh, do you see what we're doing here? We're not on we're on the last minute here. We're not doing the right thing here. So I have my parameters set. Not a good set. I want to set these parameters. I want to actually go to. Ooh, sorry for the unorganization here. Did I just kill it? No. Where is it? There it is. So what do we got here? We want the range chart based off of range. And then 22. All right, there we go. All right. See, it says 446 trades over a three-day period. That's a lot of trades, but that's also counting all our parameters. Trade 1, trade 2, trade 3, trailing stops, trade 4, trade. So these are not. It's not. Don't get overwhelmed here, because that's how that thing calculates it by how many different trade areas and how many. It's not accurate. So accurate. Because a lot of times, like I said before, you'll be in profitable trades, but then the stop will come up, and that stop will actually trade, and it'll count as a trade, but maybe not as a win. And it skews the results there a bit. All right, that's just going out. Let's go out for the week. It takes longer time to run these back testing. The more you go back, the more chance you have running into an issue and stuff. Now, what you can gain out of this is something, I don't know. If you can gain something from all the displayed stuff, let's take a look at analysis. Not much there. There wasn't much. Charts, trade, summary. Let's go out. Let's do something dangerous here. Let's go out for the whole month. Let's go out to last month. We're going to go back all the way to February 1st. So if you're running this, now there's a couple things we don't add on to this, which we could. There's the commissions. You don't want to take all these trades, but giving us a good indication of what this thing is looking for on the range chart. And if this is successful, then you could weed out the lesser known trades, the lesser setups. So when you have these setups, I'm going to go back to each one of them if it ever comes up. And then you identify what are the pure divergences versus the not so pure divergences. And out of all these trades, 1,874, that's pretty good, $4,000. What's the max drawdown? Average losing trade 47, that's not bad. It's pretty tight. Largest losing trade 187, that's pretty good. But again, you don't want to be trading this much. It's burning up your commissions and stuff. So I don't use this too often, but it is kind of interesting to see that. But right here would be one that, a good example one. This is a pure divergence, what we call a pure divergence, a higher low on the 20, and a nice little run up. And again, this is on the YM, so you're going to get a much bigger move on that. curious. I get adjust the adjust everything for that. Look at how big, these moves could have been. So we have to work on is just capturing the bigger moves. Nice little divergence, all these little divergences. But what I'm looking for, really to confirm this is the market is chopping down here. Look at this, how it's chopping. And all of a sudden, then we get the move. Well, why do we get that move right after our trigger? Huh? Well, we have everything lined up. We have our quad rotation. We probably have a little divergence that shift the momentum, and then we get our target trigger, and then doom, off to the races. Trigger, off to the races. Trigger, off to the races. Now, all races run into, you start to get overbought. Understand the bigger picture. If you're understanding the bigger picture and you look how easy that is to see those rotations, and that's a nice divergence. You have a low, lower low, higher low, enters in, takes profits. First profits, trailing stop comes up. But you don't even have to worry about the trailing stop. So as you take first profits, you find yourself above that 80. You're selling into that strength. You're selling right where it keeps on selling, right between the 20 and 50. This one, it was just a little volatile. It almost, if you had your stop, probably it just got stopped right on that pullback. Probably gave it a couple more ticks. It would have, this would have got you, the pullback. All right, so that's that. I was going to do another thing, but we're going to get this out. I don't want this video too long. I'm starting to get off topic, and I want to get these set up for tonight. So you can get these, again, at DayTradingRadio, DayTradingRadio.com, with any of your Plus memberships, or you could get them on the Patreon site. That's patreon.com/DayTradingRadio. It comes with all the scripts. It comes with the bull and bear flag, which is awesome. It works great on different time frames, and you get the TradingView version of it also. And if you go to TradingView, this is what we wanted to kind of show you something on TradingView. So let's put in the MNQ here. We'll launch the chart. Now this is automatically running the script. This is the Supersignal Quad 23. It's actually there's nothing wrong with this. The other one on the NinjaTrader was corrected for the rhythmic issues. This never had any issues. And as you can see, it works great on MNQ. It really works great on the MNQ. Now their statistics, their overview here, I don't know what this is based on. Profit factor 7.19. I don't know why that is showing up as such a 89% profitable. I don't know how far this is going back. There's a lot of things I don't see on this. I'm more of a NinjaTrader trader, but I did convert the scripts over to this. Now, if we were going to use the range chart here, this is something that we might. If you go down here, you'll see ranges, and right here. Now, I don't know if this allows you to have range or not on this. Not everyone's chart. You have to have an you have to have a an upgrade on your. And again, this is not on the. All right, that is on the 22 range. I don't have the parameters set on this properly, and parameters are important to try to capture all the profits you can. Backtested on non-standard charts produces unrealistic results too, so we don't know how this is playing out either. Market's selling off here. A little sell-off. Let's zoom in. But you do have that option on this. And I think a lot of people were asking me, why don't I see the range on my charts? Well, I think it's because you don't have the upgrade to a pro version of TradingView. Different levels give you different things. So, actually, I think the MNQ, the 5-minute, the script works great on the 5-minute, works great on the 3-minute, on the 1-minute, as you can see. I mean, absolutely fantastic. 22 range is not as good as the other ones in this case, but it's still up. Still 79% profitable trades, but it does look like there is some drawdown here. I would have to look into that a little bit more. Oh, I don't even know what our parameters are. That's what it is. So you go to your inputs, and I have nothing here as inputs. So that's probably one of the issues right here. This was the, I'm looking at the different parameters here on the MNQ. Now this is on the 22 range. And again, this is the take profit 0, take profit 2, 0, 0, 0, 0. Everything is just take profits. Take all your, it looks like take all your contracts, the 5 lots. So I'll just set up how many contracts you want to take. And then it'll take basically all of them off here at 20 ticks. Following it up with a trailing stop, but you don't need that trailing stop because they're all coming off. So if we expand that area, or maybe even take half, let's take 3 off there. You're going to definitely move this around, and then we have 2 left over. Take profits 2. We'll put that in here, and this might change everything up really in a bad way. Actually, let's put down 40. I don't think. Yeah, this is taking 2 off there, and then we'll take trailing stop in there. See that? So I'm actually liking these. I'm liking this because there was something that happened here. It looks like there was a market, probably news, and again, a news item, and getting caught in it could, just ruin your day, and you have to work all the way back up. So that's something that always got to be careful of. So right now I did have this running on these parameters right here. Just taking it off, but you can match that up and take a look at that. Now you can see I have safety net. Safety net is checked off here, and that takes it off on the rotation. So that might actually help us if we take that off, because we're going to get out of these things early and maybe not giving us the full lift. So let's see if we take that off, what happens to our profit and gain. Remember, our safety net is actually a rotation of the 9-3 and takes us off in case we're in a bad market. So it did bring us up a little bit over 6,000. Well, whatever happened here, that news, it went from, it did drop here quite a bit. It's like 3,000 P&L drop there. That was our max equity drawdown. It only took 1 trade. And that could happen. So you have to always, hopefully you don't get caught in any news. If we got rid of that news, that would be great. Then you have no problem whatsoever. All right, hope you enjoyed that video. I want to get this going. Send this out. Again, you can get it at DayTradingRadio.com, or you can go to patreon.com/DayTradingRadio. We'll see you in the markets. Markets are on now. I'm going to get in there. We'll be running these scripts live on the YouTube channel coming up, just so you can watch them overnight. But advise, get them. Let it get you in the trade, and you manage the trade. That is the way to trade these. or let it indicate the area for you and take the trade around it. Have a good evening, everyone.